recording starting to actually going, but here we go. So welcome to today's meetup in elevation training. Today we are focusing on end of year reporting. So we run through these sessions in a very similar agenda each week, and you'll see that on the meetup when you look in the elevation training member community. So we have today set aside for end of year reporting, which is under the relevant reporting heading. So relevant reporting and accurate bookkeeping. Today's agenda, we're going to say a big welcome to everyone, which we just have. We're going to quickly jump on wins of the week, a reminder about Chatham House rules. So what you hear about other people's businesses in this meeting are private and confidential. There's no gossip, no sharing, no using this knowledge to pass on to other people. So please respect each other's privacy. Then we'll do a quick round the room Q&A. So if you do have any questions, then we can do those, and then we'll jump into the little focus for today, which is end of year reporting. So, Kari, a win for you for this week.
Oh, I'm getting to go and have coffee with an awesome client this afternoon. That's a great win.
Very cool. Very cool. And my win for this week is that elevation training, we're getting more people talking about it and more people talking about signing up. So I'm super stoked to get more people coming into the community, and one day we'll get more than just you and I in here, Kari. So super exciting. Any questions about elevation training or anything going on in your business? And I say your business, I mean our business.
No, I don't think so. Just
Awesome.
navigating around the Kajabi.
Yep. Yeah, I might send a couple of emails out with some videos on how to do extra things as well in Kajabi. Awesome. Okie dokie. So we'll jump into today's topic. And so today's topic is end of year reporting. So I don't have any slides or handouts to show you, but I do have a recording that's already set up in the library section of Kajabi. And that is a recording under relevant reporting under Zero Training called RRX03 end of month. And this one does have a checklist as well as a 59-minute video. So I'm not going to take 59 minutes today. We're going to run through the basics. And then if you want to know more of the how-tos, then you can go back and watch that RRX03 video. So some of the things you need to think about for end of year, so end of financial year, when it comes to finishing off your bookkeeping before you send it off to your accountant. So the first thing is making sure your bank accounts are reconciled. So what does this mean?
Making sure that there's no unreconciled transactions sitting in your account transactions, even though they may not be sitting in bank feeds. They're sitting in the actual bank statement, bank transactions.
Yep. So unreconciled transactions. So when we think of zero, that's and MYOB as well. It's stuff that you've entered in that hasn't been matched off with a bank statement yet. So you might have put in that you've paid such and such a person, but it actually hasn't come out of the bank yet. Or somebody's paid you. So you've marked in that they've paid you, but it hasn't come through the bank yet. And so it's still sitting as unreconciled in your transaction listing. The other thing to do is to get your bank statement, or even just check out on internet banking and make sure that the balance that's in your system is the same as the balance that's on your bank statement. So sometimes, not all the time, but sometimes they don't match. And there's a handful of reasons why that doesn't match. But if it doesn't match, then that's the first step of awareness that you need to know. And then we can guide you through the rest of the steps. And I might do a full separate video on that another time. So actually there is a how to do your bank reconciliation video for both Xero and MYOB in the library side of things as well. So they're nice little quick 6 to 8 minute videos. So that's the first thing. The second one is to make sure that your you've got all of your loans in the system and they're up to date as well. So if, for example, you've got a bank loan, then you want to make sure that that's sitting in the liabilities section in your balance sheet, and the balance of that loan matches what the bank says that that loan is. So this means that you've put all the bank fees in. It makes it ensures that you've got all of the interest on those statements in as well. So this is easy for bank loans where they are actually sending you out a statement. Not so easy for car financing and equipment financing where they just give you one piece of paper at the start saying, here's how much you're lending and here's how much the interest is, and you just pay us this amount. So yet again, if you do have a situation where you know the interest isn't going in, then there may be some calculations that need to be done. But at least if you've got that documentation, it's a good start to be able to claim the interest. So just so you know, the interest on your loan repayments is a claimable tax deduction against your income, but the actual loan repayments themselves are not. So we do need to know how much interest you're paying on loans rather than how much you're paying off of those loans. The other one is making sure all your BASs are lodged and making sure that all of the GST that you've collected and paid throughout the whole year matches what the system shows, what your bookkeeping system shows for the year. So having that double check of here's everything that I've lodged. If you are lodging quarterly, you've got 4 BASs to add up. What is your GST collected on sales? What's your GST paid out on bills? And looking at it for the whole year, and then adding up all of those 4 BASs and making sure that those numbers match. Because where they don't match, it means you're either underpaying the tax office and you may need to be to pay that back later, or you are doing yourself out of some GST claims. So the main reason where we see this difference is that if you finish off your BAS and then you go back and you add more bills in early for that BAS period, or somebody goes and deletes something. And so we want to make sure that your GST is right. And the sooner you can do that, the sooner you can clear it up at the end of financial year. So we've still got another just under a month to finish the BAS for end of financial year. So you've got a few weeks to do those checks and sort it all out on the last BAS of the year, so that April to June BAS, so that you don't have to then get a surprise when we do your financial statements and tax return in a few months or 6 months or even after Christmas time. So having that sorted early means that you are well placed for not having any surprises after we check your work. If you haven't already, payroll.
If you find that that's happened, what do you do?
So if your GST is different on your BASs, then you can definitely just update the numbers on your April to June BAS. So anything where the GST is less than $5,000 worth, and so this is like $50,000 worth of purchases or $50,000 worth of sales, you can update on the next BAS. No problems at all. So just fix it on that one. So payroll, obviously, end of financial year. We're at the end of July now, so the single touch payroll end of year finalizations should have been done by now. So if they haven't, then that's a good reminder. And then it's having a look at some of the reports that you want to run. So to see how your business is going. So I like to look at the end of financial year, the month by month profit and loss report. So this profit and loss report shows July and August and September and October and November and December and adds them all up. And so you get an end of year annual total as well. And it's a huge report for some businesses. There's lots of there's obviously 13 columns across with one for each month and a total, but then going down the list, you've got your income in the different line items, and then you've got all of your expenses in the different line items. Now, for some people, opening this report up and looking at it is like, what? where do I start? This is just like, it's a page full of numbers and I'm scared of numbers. And it's absolutely okay to do that. But what we're looking for is patterns. Now, I love patterns and I love doing jigsaws and stuff like that. So for me, looking at the yearly month by month report gives us an opportunity to see what patterns are. So, what we're looking at in income is making sure that we're not missing any major income. So, if you know you've had a great December because you have a lot of sales for the Christmas period, then December should be a bigger number than some of the other months. And so, it's looking for that pattern. So, if that's what your income looks like, then that's what your profit and loss should look like as well. When it comes to expenses, we're looking for missing gaps. So, for example, like I love the telephone line item because telephone, everybody pays monthly generally, and it's generally the same amount every month. So, if it's 100 and 100 and 100 and then zero, and then 100 and 100 and 100, it's like, what happened to that month that's missing? So, you can see on that one line item what's going on, and then you can follow it back and trace it, and you go, okay, well, maybe I had a credit for that month, or maybe we missed a month, or maybe it's coded to electricity instead of telephone, and you can find what you're looking for because you've found a hole that's missing. On the flip side, you can also look for things that are out of whack. So the rent line item is another rent line item that you can really see where the issues are, is because yet again you're paying the same amount every single time, whether it's weekly, fortnightly, or monthly. So it should be a reasonably steady line item across that whole amount. So if it's $100, $100, $500, $100, $100, you're like, so what happened there? Have I miscoded something? Have I overpaid, or have I paid in advance? And so you can start looking at the patterns and start drilling down as to why those things are out of whack, before your accountant gets it and looks at it and goes, what's going on here? So you can do your own self corrections in parts. Any questions about that one, or anything that you observe when you look at profit and loss, Kari?
Yeah, I'm the same as you with loving to drill into it and see. My thing is that anything that there's any sort of variance, having an explanation for. And
Yeah.
it's not an explanation as in why did this happen? It's just a why did it happen?
Yeah.
Let's make sure we know why.
Curiosity.
Yeah,
Yeah. Yep.
yeah.
Um,
Curiosity rather than accusation. Yeah.
That's exactly right. And it can help you then make better decisions about your business by looking at this report, because you can then go, oh, why was I paying $100 for this thing when maybe I could get a better deal for it? And so it can then prompt you to do a little bit of a whole business analysis at this time of year and go, well, maybe we should cut out this cost, or maybe I can get a better deal for this. And it may save you a few $100s, just by looking at this one report. So definitely worth looking at. The last report that I'm going to talk about today is your balance sheet. Now, your balance sheet is a snapshot in time, and this is a report that's well forgotten by a lot of people who just do their data entry and think that that's all their bookkeeping is about. So, we want to level you up and talk to you about balance sheet. So, this is a snapshot in time. So if you're looking at a balance sheet for the 30th of June, then it's already in the past, it's already done. But going back in time and going, okay, was my bank balance at the 30th of June that amount? If yes, correct. If no, why not? And being curious about it, like we just said. Was there something that has been put through the system that hasn't hit the bank account yet, or something like that? Then making sure that all the other line items in the balance sheet look correct as well. So on your balance sheet, depending on the terminology, so there's lots of terminology on a balance sheet. One of them is trade debtors. So this can also be seen as aged receivables or accounts receivable, depending on which system you're using and which terminology you're looking at the balance sheet and the corresponding reports. But it's going through and making sure that everybody on that list is going to pay you. So do you need to phone them and ask them when they're going to pay? Do you need to offer a payment plan to get some money out of them quicker? Is there ways that you can bring that money in? Or have they gone and ghosted you and you're never going to get that money back? So it's being aware of who owes you money, which is what your debtors are, or your trade debtors, or your accounts receivable, or your receivables. Same words, same thing. And then similarly for the bills that you need to pay as well. So those are your trade creditors or your payables. So who do you owe money for to, and making sure that all of those are sitting on that list at the right date. So back in on the 30th of June, who owed you money? Regardless of whether you've paid it or not now, it will still show on that 30th of June report. Like I said, we've also had loans. So if you've got a loan in your business, making sure that that's on there at the right amount. And then any other things that you own in the business or owe in the business to other people will be showing on that balance sheet as well. So making sure those numbers look reasonable based on what you know. So those are some of the things that you'll look at on a balance sheet. Anything from your experience, Kari?
With your debtors and creditors, look at them, really look at them. If you've got a receipt or if you've got a bill to pay in your accounts payable for Coles, you know that there's something's gone wrong. So
Yep.
drill back into it and have a look.
Very rarely does Coles let you walk out with their goods without paying for it. So, yep, absolutely. Yeah, same with any of those cash type payments. If you know you normally pay them on the day, but the bill's sitting there, there's something going wrong. Have you entered it in twice, or have you entered the bill in and then also put the payment in as spend money, and so it's in there twice, and you need to get rid of the bill, or you need to keep the bill and match the payment up to that bill, or have they given you two bills? Because that's another thing is sometimes people just give you two bills and you put two bills in the system and you paid one. And then you're like, well, I don't actually need that one anymore. So you can actually go through and delete it because it was a duplicate. So lots of things to look for. So hopefully those little tips have helped to get you on the path for getting your end of financial year right and ready for the accountant so that your tax return can be produced smoothly. And yeah, reach out if you've got any questions. Use the feed to put any Q&As in about anything that you've heard today, and we'll be able to point you in the right direction.